Good morning and happy Monday out there. Boy, have I got stuff for you today, so stick around. I've got some interesting numbers and insights. I knew this weekend could be a little breakout session for us, and I'm seeing some really curious stuff, probably raising more questions than answers. And I've got a few questions to get to here this morning, too. I'll pop in there in just a second. And I always get a text message when I start my show. That's my brother. Hi, Randy. um, wow, let's start out with the first big news here this morning. For Monday, we have 6,139 homes on the market. That is an increase of almost, I want to say, 700 homes versus last Monday. This weekend, we maintained about 6,250 and stayed out there. And I'll show you what it looks like on the chart here. The chart is showing, this is the 7-day moving average that you see me doing. The blue line represents the number of new listings that are coming on in the past 7 days. And the yellow line is homes that went under contract. So I put a little red line here where we're at today and kind of rolled it back to show you in comparison that the number of contracts is really pulling back. And we're going to discuss that in some detail today and try to figure out why and what that means. Because one of the things that I'm seeing, and I'm going to show you on this chart here, I'm going to pull it up. There's a number that kind of jumps out at me here. And that is the number of homes under contract that they accepted as a contingency. Remember, a contingency is a home that the seller is saying, the buyer is saying, I want to buy your home contingent on me selling my other home. They weren't doing that. See how low these numbers were? People were not willing to get a home on a contingency, not willing to accept an offer with a contingency. So why is that number going up now? Well, there's a couple reasons, and I'm not sure where we fall in this. One, maybe sellers feel more confident that the buyer's going to have a much easier time selling their home, so the contingency doesn't scare them. Or maybe they're thinking, well, I only got 2 offers today. This was a higher one. I'll go ahead and accept the contingency. So I don't know. I don't have an answer to that. I only have some theories. So, but that number jumped out at me. That popped out pretty big because, we were sitting here looking at numbers in the, let's see if I can scroll this over. If you look at the contingencies, they were rolling anywhere from 70 to 80 to 90. And now all of a sudden we're 106, 107, 105. So pretty big jump statistically. I mean, 30 homes is not a big jump, but that's quite different. Buchanan, love the new intro. Thanks. I'm just trying to shorten things up for you. Let me get to a couple of these questions, and then I'm going to do a little deep dive in here for you. So, Bar 60 Strong says, with the rental and housing market exploding price-wise, wages not keeping pace, and inflation throwing fuel into the fire, is a severe downturn in the housing market on its way? And do you see the 50-year government-backed loans on the horizon? The last question, I'm going to say no, and I'm going to tell you why. And do I see a severe downturn in the housing market on the way? No. And we're going to go into that, and I'm going to tell you why. Now, why do I think we're not going to have a 50-year loan? I think the central bank's kind of got itself backed into a corner right now, and they want to start backing away from buying mortgage-backed securities. They're doing about $40 billion a month. They don't want to suddenly stop it because the economy is going to just put on the brakes. The markets are going to overreact. Interest rates are going to go up. Then we'll have a big crash in the housing market. So they don't want to do that. They also don't want to add more fuel to the fire and make houses easier to get, because that'll really create a bubble. And I think putting out a 50-year mortgage will add a lot of fuel to the fire. And I don't think they're in a position where they can do that. There's a possibility that we might see some 40-year mortgages start to show up, but that remains to be seen. And again, I think that's not so much that the Fed will do it, but that certain mortgage companies will do it. So the government really won't come in and say, here's our new 50-year mortgage. There may be some lenders that are offering that program, but I think it'll be very, very tiny. If the Fed were to come out and do it, oh man, house prices would be nuts. It would be absolutely nuts. Well, let's show you where listings are right now. These are active listings. You can see that the graph is going up, right? 55, 95. It lags a day or two. We're actually sitting at 61 right now. And then It's still brisk out there, folks. I mean, I'm going to share with you where I think this is headed. And there's some Redfin data I'm going to get to in a minute here, too, that supports what we're seeing. 60.9% of the homes are going for above the list price. And the biggest change is that we used to see the above list price average around $15,000 in the 300 to 400,000 range, but now it's 20 grand. 400 to 500 is 20 grand. So that aggressive bidding is still going on out there. It is slower, but it's still happening. We go to Redfin, and they are saying that the demand index is down 1% from 2020. So you can see here that in March of last year, this blue line, everything came to a halt. Nobody was doing anything in April. There were no contracts written. Real estate was dead. California, Washington, you couldn't even go out and show a home. And that's Washington, Seattle. That's Redfin's main headquarters. They laid off a ton of agents. They had a bunch of agents. They said, well, party's over. And all the iBuyers, Zillow, Open Door, OfferPad, they all canceled their contracts right here. The end was near. And then all of a sudden, wait, I want to get a house now. And look at that. It just went nuts. Get me out of this apartment. They've closed the gym. They've closed the pool. And there was a rush to buy houses. And then it continued. And then this year, it went even more bonkers in 2021. Now demand is starting to slow down. And why is demand slowing down? Watch a guy named Matt, the mortgage guy, and he had a great analysis of this. In fact, before Redfin came out with this data, he predicted, he wasn't predicting, he was saying he was seeing this in his numbers and talking with buyers and talking with agents. And while you have this huge demand that popped up that people wanted to buy a house, guess what's pent up now? People want to go on vacation. We're seeing a summer slowdown unlike anything we've ever seen. And it's a slowdown on two fronts. One, they just want to get out of Dodge. I haven't had a vacation in a year and a half. I want to go somewhere. Number two, they're just tired of getting beat up. I called 2021 the year of the buyer beatdown. You can only be beat down so far. And you're just going to say, look, let's just walk away from trying to find a home for a while. Let's go on vacation. I think that has a lot to do with it because it's happening nationally. This isn't just a Phoenix thing. It's not a California thing. Nationally, things are starting to tamp down and buyers are fatigued. There's still enough buyers out there where prices are not going down. And it says that right here in Redfin. It says this, let's see, I'm going to go back to Redfin here. The president makes a comment here, the chief economist. Even though there are no signs of prices coming down, home buyers may face a bit less competition and have a bit more selection of homes this summer than they did earlier this year. All year we've heard stories about homeowners being reluctant to sell because they don't want to face a tough market as a buyer. As the housing market cools slightly, we may see more homeowners finally decide to cash out and move. As the economy continues to reopen and employers clarify their work from home policies, more homeowners may decide that a move is in order. Now, that comment about the employers, I think, is very interesting because there are still a lot of people out there that don't know if their employers are going to call them back into the office or if they're going to let them move. I spoke with a young lady yesterday about listing her house, and she wants to go to Michigan. She works for Aetna, and she works from home. And they told her, well, you can go ahead and live anywhere you want now. God, I'm going back to Michigan. So there's a lot of companies right now that haven't made that decision. So there are homeowners waiting. They're waiting. Are you calling me back into the office or can I live anywhere I want? Once those decisions start being made on a global scale here in the United States, you may see more listings pop up. And so are they going to move to Arizona? Let's take a look at that. Right now, here is the top 10 metros by net inflow. In Phoenix, we're number one. Net inflow in May of 21, 9,490. Last year, 7,736. A portion of searches from users outside of this metro area, 38.5. Last year, 35.2. Where are they coming from? LA. Coming from Los Angeles. We're going to beat the Clippers tonight, by the way. The Suns are playing the Clippers. It's going to put us in the final. You know that the lowest price ticket is $262, so I'll be watching that at Zips or something. Median sales price, $400,000. Number two is Las Vegas. So people are getting out of their large cities from, again, LA, San Francisco, New York, Orlando, Florida. They're going to Tampa. That's an interesting one. New York's going to Orlando. And Cape Coral, Florida is getting a lot of their people from Chicago. Frenzied U.S. residential market may be past its peak. I think that's kind of obvious right now. We have reached our peak in the frenzy, and I'm going to talk a little bit about that. The Housing Bubble blog. This is the one that's been predicting a housing bubble for good 2-3 years now. But they do have some interesting comments talking about how easy it is to get a listing. It says it's easy to get a listing if you promise the sun, moon, and stars. It's entirely another to deliver it. That's why we're now seeing so many listings fall flat. You remember hearing me say that in this stage of real estate prices going up and up, what you see is people overshooting. Agents going, just put it on the market. We'll take 1 or 2 pictures. You'll sell it in this market. Everything's selling. You want 600,000 for it? Sure. Yeah, let's put it on the market. I'm going to show you an example how well that worked. Here's one here. Beautiful home, right? It's now $499,900. At least he didn't price it $499,999, but it's $499,900. Interesting home. It is in Chandler, and it's 1,899 square feet. The original listing price was $600,000. I didn't show you the screen. Here it is. Original listing price was $600,000, and after 11 days, they went down to $499,900. Here's the house. So is that a price reduction because the economy softened up and house prices are falling? No. That's a price reduction because the agent and the homeowner says, let's see if we can get 6. Well, they didn't. So after 11 days, they put it down. If you're looking to buy, now is the time. I think we're going to approach a sweet spot here, folks. I think we're going to see a period where there's just enough homes on the market, just enough lowered buying activity that the waiver of appraisals and this fierce bidding war will slow down. And I think it's going to happen sooner rather than later. Right now, the general public is not feeling this slowdown. You're seeing it because you watch the numbers every day here with me. So you're seeing the numbers slowing down. But we're going to reach a sweet spot. It doesn't mean a collapse, but there's going to be a period of normality that's going to show up here somewhere between now and I'm going to say Christmas. And so you're not going to be able to put a house on the market and say, I can overshoot. You're going to have to price it realistically. You're going to have it pretty clean and good condition. You're going to have to be competitive. But as a buyer, now's the time to look at something that's been on the market for 10 days and offer that lower price because they're not getting it. You can tell when somebody's asking too much because you're in there looking at the market and you know how much the house is worth. Make your offer. Because right now, if your home's still on the market in a week, then you've done something wrong as a seller. You've overpriced. As a buyer, you need to start looking at those types of opportunities because if they've overpriced the home, you're not going to be in a bidding war. Now, they could sit there and fold their arm and go, I'm going to get 600,000. Well, they won't. They will eventually come down to that price. The price you're going to get is the price you're going to get. It depends on how long you want to wait to get it. In other words, if you price too high, it doesn't mean that if you just sit there, the buyers will eventually show up. It means you will eventually have to come down on your price. And you're going to start seeing more and more of that as that line I showed you, that red line of homes under contract continues to get lower and lower. And it's going to be an interesting time to watch as we see this market shift and change. So as a buyer, if you see something that's been on the market for 30 days, shoot them an offer. Get what you want. They'll probably take it. And if you're a seller, try not to be overzealous and try not to overprice. Try to get, you can price too low and people are going to bid you up now. So you don't have that danger. That same house I showed you for $499, their strategy probably could have been better if they'd have priced it at $475. They'd probably got $499 or a little bit over $5 because that $475 would have got all eyeballs on that home. Now, I'm not beating up the agent, and I'm just saying that kind of strategy can get you more traffic, more eyeballs, and you'll get more bids. When you price too high, people just ignore it. So that's a dangerous thing to do if you want to list a home because time on market is death. That's where houses go to die. So we're going to watch these numbers all week. What do we think we're going to be at next Saturday? Are we going to be up another 100 homes? Because it's going to be 4th of July weekend. I don't think a lot of people are going to list their homes on the 4th of July weekend, but I could be wrong. But sales might pull down to where listings will start to climb up naturally anyway. So next Saturday, Friday and Saturday is going to be interesting to watch. Now, I will not be doing my Saturday update next week because I'm headed out of town, but I will have an update on Friday and we'll know a little bit more then. Until then, I will see you tomorrow. Take on the day. Have a great Monday and a fantastic week.